In this module of Behind the Mission Loan, you will learn what it means to scale, and you will explore things to consider before scaling, steps to take in developing a growth plan, common strategies for scaling, and successes and lessons learned from other mission lenders. Scaling can mean different things to different mission lenders, and therefore have a variety of things to consider before scaling, and many tactics for achieving scale. In broad terms, scale means to grow mission.
What does it take to scale an organization? Many times folks think scale is about, kicking it to the next level or seeing a growth of a certain number. Scale is defined by each organization in terms of quality, quantity, and outcomes, right? And so when I think of scale, it all starts with your team. It really does. If you think of an organization who is successful, that team plays a critical role. And that team needs tools and it needs guidance to get to success. And I think when you think about your team, it's allowing them opportunities to make decisions so that they can serve the client well, to document those decisions so that you can then replicate success. Scale is in many ways about replicating what works and doing it again. Ideally, what we're doing is weeding out the things that are not as effective as we want them to be. And so with the team in place, LiftFund has very audacious goals as it relates to number of loans, throughput time, which is how long does it take from origination to closing. But we are also very intertwined in different departments. And I think when folks ask us, how do you do your business? I take the time to tell them we have a mission and a culture that is committed to production and committed to a reduced throughput time. Now, scale is also important to be thought as what is going on in business lending today. And if we think of an SBA product, we know that there's more documentation than an online lender would require. And so for us, it's also how do we set expectations with our clients? How do we ask the right questions and use our system to capture data that we can reuse for forms and things like that so that we ease the burden of scale at the end of the day. And so when I think about the work that we've done, both from a microloan perspective and also a small business perspective, listening to our team members and understanding, the successes and the challenges that they face, documenting them, and then reiterating so that we make things easier is important.
There really are a lot of things that have to be considered when you're thinking about expanding or scaling your operation. It's a topic that all intermediaries are constantly thinking about. If it's a small intermediary that has 3 employees, they're thinking, well, how do I scale to become 10 employees? Or if I'm completing 12 microloans a year, how do I get to the level where I'm now completing 50 microloans a year and making a greater impact? And so when you're thinking about scale, there's a number of issues, a lot of issues that you need to be considering.
They need to think about why they're scaling. I've often said at WBIC, we're not growing an empire, we're addressing a need. And the need still exists, and I'm sure for most intermediaries, they have not filled the need of the service area, of the clients, of what they're doing. But you do need to look at that. It's not just growth for growth's sake. Again, it's really addressing a need.
When I first met our boss, had this commitment of being the first U.S. micro lender to be 100% self-sufficient. And there's many ways you can do that. And one way of doing that is scaling. And the way you get to scale is you create a culture and an environment and a driven organization committed to impact. And the way you do that is, first, you applaud them for their successes, and then you measure them for their successes. And you also measure them for things that are not working so that you don't do that anymore. And Lift Fund created standardized key performance indicators, so KPIs, in 2011. We tested and reiterated and iterated to finally come up with a uniform, really, approach to sales. Now, many folks will say, that's so black and white. Well, 85% of our clients are minority, underserved businesses. 10% are veterans, 40% are women-owned businesses. I think when you have drive and you have mission, you can align key performance indicators to help you dig deeper into your mission and also into your impact.
What are the financial resources that are going to be required? What's going on in the different communities I might be expanding into geographically that are different than the one that I know the most about now? What am I going to do with personnel? I'm going to need to hire additional expertise. How am I going to do that? Not just financially, but am I going to be able to find the expertise that I need? Taking on the additional risk is another thing that you're going to have to consider very carefully. As your portfolio grows, you are going to be taking on additional risk. The dollars are getting larger, and therefore the possibility of losses are also going to get larger. How are you going to be able to cope with that, especially when the economy throws a curveball? You've got to think through strategies, and you've got to put resources in place to make sure that your organization is going to be able to survive even when we do see a curveball, which inevitably is going to happen.
So as we've grown our organization and our product mix, we pay really close attention to the impact portfolio of what we're providing. And we can't have all 100% impact-driven products. We must also pay the bills. And so we have to make sure that as we launch new products, the expectations of that product are in line with the results. And so if we have a product that is going to be a break-even, we want to make sure that within 2 years it is at break-even. Otherwise, we need to shift and either pull the product or scale the product at a level that's going to allow for that break-even.
Scaling in terms of people and process are critical because our folks really make sure that we deliver upon the services that we ask and say that our mission says that we need to do. Without those folks, we couldn't deliver with those. So our most important part is making sure we're finding the right persons, we're giving them the right training, and we're giving them the right support to make sure via technology or other solutions to really provide and deliver on those services to our customers. The only way you can get larger is by using those complements to do so.
And so through the years, for instance, one of the things we learned real quickly as we were adding new staff pretty consistently was that you absolutely want to have the right people on the bus. You can't move forward without that. And so we've been really clear as we've built the culture of this company to make sure that we have fierce people who are stunning colleagues, right? You show up, you work with people a lot. And so you want to have people here who, they're magnetic, right? They bring you into work so that you can work together. Most important thing, period.
The other piece would be really around process. And so that's great. You have a lot of folks who really don't quite understand what to do, or they do it differently every single time, or sometimes they don't do it at all. And in terms of doing a shortcut, that doesn't work either, because then you've got inconsistency in your end result. You have inconsistency in your activities as well. So our goal is to make sure we have great consistency in our activities via the policies that we've set up, but also the processes in terms of what we do, how we do, when we do, and why we do. And always go, why? That's important. If you don't understand why you're doing something, then you shouldn't do it. It's very simple. So using process, using our people, then through that process, we can ultimately deliver on our ability to provide greater services, greater numbers of services to individuals, but also greater opportunities for folks to come to us as well, which in turn helps us grow and provide more services to folks as well.
And from a technology standpoint, in order to scale, it's going to require increasing levels of efficiency. And so what tools are available? And how am I going to deploy those tools? How am I going to pay for those tools?
One of the things we really focused on with scaling was around our lending process. And we actually work with an entity now that really allows us the ability. Before, we used 4 different systems to really keep track of a loan. The application process, the underwriting process, the loan production process, i.e. generating documentation for closing the loan, and then the loan servicing process, making sure payments happen every day and all that stuff. Through this process, we went back and said, we have to change what we do. There's no way we can grow, add more loans, add more ability to service more customers. Through that process, we went through an 18-month process of looking at software providers, technology solutions to really help us with that loan process, and selected a entity that could help us, and took us from 4 software solutions to 2 software solutions. One that handles everything from loan application through the loan closing process, and one that handles the servicing piece. We're still excited about the process of things that we can still further do to accelerate our internal delivery between our loan officers and our loan operations team, but more importantly, our work that we work with our customers and our borrowers. The information is transparent. They see what we see. We can answer questions that they have a lot simpler because they see what we see and we see what they see as well. We can also help them in terms of uploading information so we're not scanning in documents or having a bunch of papers sitting around. So again, I think it's helped us with a lot of things that we need to do to really, again, provide better customer service to individuals.
So Northern Initiatives, we serve a broad geographic territory, which is primarily rural. There's a lack of access to timely education. And so we were thinking about how do we scale our technical assistance to match our loan volume growth? And technology was that key for us. And one of the other reasons why we developed an online learning portal is, customers have a lot of the same questions. As small business owners are opening, they might not understand how to read financial statements. They're trying to think about how do I reach my customers and increase my sales. So we were answering a lot of the same questions over and over again, those basics. So we took those frequently asked questions and packaged them into an online portal. So they can have access to it at any time as coaches come on, or we bring in other partners. They're able to provide the same information and knowledge to our customers. So that was a key area for us and really has helped us to scale our technical assistance. As this online learning portal evolved, there was interest from the industry as well. So other CDFIs were thinking about the same thing. How do I use technology to streamline my technical assistance, to reach more borrowers, to be more effective with the limited resources that we have? So now that has also become a revenue source for Northern Initiative so that we can continue to evolve the online learning portal. And another benefit is that we now have this broad group of partners throughout the United States that's informing the content and the delivery through that online learning portal so that we are able to talk to all of the different types of customers that we're serving.
When I started at People Fund, we served 5 counties, and that was 1 MSA. Now we serve the entire state of Texas, and that's enormous. And providing in-person technical assistance is expensive. I mean, you're talking airfare and hotels and mileage. And so we started to look at how to provide that content while minimizing our cost. And so offering boot camp style programs is what has enabled us to scale. Rather than have 6 weeks over 2 hours, you can do an all-day boot camp, and we ended up with less attrition as a result. So thinking about how to scale up and increase both the number of people served while not compromising the content.
So before we really got going on growing, We went out to CDFIs across the United States, other lenders, and we followed them around like little kids. Some of the best in the country, and we followed them around and asked them how they grew and what they did and mistakes they made. And it were the site visits, like being there and talking to them, completely informed the way we went forward.
Sure, moving into a new market is a great example because we really literally have opened up offices in a different part of Wisconsin in the Northeast area. But how we started was piloting a little bit, playing nice with everybody in that community. Is there a need? Is there a niche for WBIC in our organization, or is that market area covered? And then we've gone in, not tentatively, but we've gone in, I think, strategically. Rather than, boom, push in with an office, 5 people, we've gone in with a part-time person working out of his or her home. Are we getting pull? Are we being invited in? Are we part of, if you will, that economic development ecosystem? Yeah. Okay, we maybe add that person from part-time to full-time. Do we still need an office? Probably not. We can work at partner offices. We can do our training anywhere, evenings and weekends. We can look at how we fold in with that whole lending area. And in almost all cases, we started out with a part-time person in a market, grown it to a full-time, grown it to a couple, and then expanded to an office. And now a lot of those regional offices have about 7, 8 full-time individuals.
A couple of years ago, we had an incredibly insightful moment where we realized we were not going to be successful unless we fundamentally changed the way we approached credit, providing loans to people, because what we were doing was not scalable. We used to have to touch every single loaf of bread as it went by and actually pick it up and smell it and make sure that it was good, right? And that process is way too slow for us to scale our lending as other organizations across the country have. And so we started by looking at the way we approached providing loans and what pieces of that could we automate in some form. What were the similarities of all the people we were making loans to over the last 30 years? So we hired a mathematician, a finance professor from the university, and we had him come in and look at 30 years of our lending data. And we didn't give him a lot of guideline. We wanted him to have a third-party evaluation of our lending. And ultimately, he came back and he said, there are really consistent patterns in your data of the people who pay back loans, the repayment ability of the people that you're providing loans to. And so he developed an algorithm that we now use. His name's Keith Jacob. We affectionately call it the Keith score. And so we use the Keith score now to give us a green light, red light, yellow light, to either dive in deep for underwriting, do some basic due diligence for underwriting, or just say no. And what that has done, especially the just say no, it has freed up our time to focus on the loan clients that we know stand a chance of being successful in underwriting. It has allowed us to scale our lending in a way that we did not expect.
And then there are other products. So if you think about tools that you have in your tool belt to provide access to capital to underserved markets.
At Lift Fund, we love saying yes. And when we moved into a very poor area of the U.S., we saw that credit scores were decimated, that cash flow was not being proven through banks, and we needed to jumpstart our impact. And so we created products around that. Every time we look at an opportunity to go deeper, it's usually we are saying no too much, or we see barriers in what we're asking of our clients. We also have another product that specifically we saw folks who performed really well in our risk model fall off. And the reason why, what we found was that we were asking for too many documents for such a small amount, $25,000 and under. So we looked at, okay, what should we put into place so that we continue to provide the capital to the clients we want to serve? So we removed 60% of document requirements from that product so that we now have something that is trusting our model, all that data aggregation for a reason, and reducing the burden of documentation. When we first started as a micro lender, we actually added multiple products, including the SBA 504 in 2008, and then we included the SBA 7A in 2011. And we diversify products as well to get to scale because we know that not one product fits all.
You know, maybe they're at the stage where they're not quite ready for traditional bank borrowing, but they do have that need for excess capital above what the microloan cap is. Perhaps you consider operating it with SBA's Community Advantage program. So that you can increase those tools that you have in your tool belt to take on larger size, a little bit more sophisticated businesses and grow your business and scale your business in that way.
So becoming a CA lender was a strategy for scaling. It was obvious to us that the advantages of doing government guaranteed loans, SBA guaranteed loans, was going to provide a lot of benefit to the organization, not only in being able to have the safety net of the guarantee on some of these loans as we explored the larger loans, but also because we realized there were some opportunities to help our funding, to create funding sources for ourselves and create revenue streams for ourselves.
So another initiative or another way of doing business that we've been involved in has really been working more in collaboration. We actually formed a collaboration with 3 other CDFIs, and the idea is sort of the next step in terms of working in an ecosystem is to really garner support and resources bigger than what you can individually. And I'm talking financial resources here, bigger than what you can on your own to really grow and to scale. And then it comes in, and we were very lucky that we received a multi-million-dollar grant award through this collaborative that individually none of us would have been able to receive. And not only was the money good, let's be clear, the money is very good for mission, but we also learned from each other tremendously. Some other organizations were totally rural organizations. WBIC benefited from that knowledge. Another organization was a little bit smaller, working in Native communities, and we really had a greater sense on how to work with Native Americans in the work that we do and help that nonprofit also really grow and scale because we were much larger than that. So a collaborative, working collaborative formally or even informally can be another tool in that whole concept of scaling, that you don't have to do it alone always.
The same coaching you provide your borrowers before they grow their business applies to intermediary strategy for scaling. You must plan for growth. Your growth plan must support your mission first and foremost, as well as your business model.
So to begin with, it was really a reaffirmation of who and what we are. So we're a mission-based CDFI. We're a small business lender that provides business services. That's what we do. And so within that context then, what is it that we need to do to be able to scale up our operations, particularly if we're moving into new markets, such as urban areas? We're traditionally a rural lender.
I've seen intermediaries' desire to scale outweigh their ability and their readiness to scale. And unfortunately, in some cases, that's been tragic and in some cases has resulted in the intermediary going out of business. Not having that solid plan, not having some of those financial resources already available, sort of the idea being, let's scale up, and we know that when we do, that's going to enable us to attract additional financial resources. I would probably caution that may not be the right way to try and scale your business.
So as a lender, you want your data to showcase what you do, but also inform what you do. We look at our data in a way that makes us informed about what areas need us. We were fine for 20 years serving a 5-county area, but the reality was poverty was moving and who we serve was changing. And that changed both how we operated and the loan products we offered and the educational support, but it also changed how we wanted to connect with the community. And what ended up happening was we scaled statewide. There was a demand there that we weren't expecting. When there are more community lenders in the city of Chicago than there are in the state of Texas, that informed what we did, and it impacted how we raised capital and how we deployed capital and what tools we used to do that and what educational programs we created. And all of that originated by knowing from our data that poverty was moving outside of Austin. And so you have to be ready as a lender for that pebble to turn into a boulder, but you need to be able to use your data in as many different ways, because if you don't have a product that is responsive to the needs of the community, you're not going to be able to sell it. People recognize a dud, and they'll know if it's something that they truly need, or they'll go to something else if it's not a good fit.
I think it's important through the process of scale, once you've made a decision as to where your real pain point is, you've made a decision in terms of selecting priorities, you move through those priorities not all at once, meaning you're not taking on all projects at the same time. You really decide, using your matrix, what's most important to your organization, and then you really commit your resources to really finishing that project. And they may run in concurrent cycles, but the most important part is you're focusing your energies to get a major project done, which will in turn lead to benefits for other projects as well.
So our company has planned succession from the first moment I stepped in as president. It's ingrained in our bones, because each one of us knows that our single most important job is to have the person who could replace us tomorrow. That we don't ever have any pinch points. And so the organization has remained really flat that way. I'm out doing biz dev with other people who are doing biz dev. I'm out writing grants and raising money, and each one of us is the same exact way. On any given day, we're going to roll up sleeves and do what it takes, which means that all of us are really well cross-trained. Ideally, if I were hit by a bus tomorrow, the organization would not miss a beat.
Scaling can mean scaling up, and I think when we talk about scaling, generally that's sort of the direction that we're heading in. Scaling can also mean scaling down.
As we have grown, one of the things that we've done really well is to back off of new products when we realize that it's not the right fit, something isn't working properly. And so being okay, having a culture of like, you know what, that's all right. This didn't work, let's move on. That pivot is incredibly important, because if you auger in and bury, you're not gonna end up moving forward very consistently over time.
So done right, with the right vision and the right tools, scaling can really lead to some tremendous outcomes.
For more best practices videos, visit the SBA Mission Lending Library. And remember, together, we're growing the economy one mission loan at a time.